Yeah, so that's great I mean, I have 4 kids in public school right now, so that's great to hear about the public schools, and obviously an altruistic endeavor that will lift up society. What about something that's a little bit, I'm going to go with the word dirtier, that has been getting a lot of bad press? I have enough knowledge in this area to be dangerous, but let's say crypto mining. So it just struck me, you said I'm using on-site energy, renewable energy. We were talking about potentially launching a crypto mining fund, and I know the 3 characteristics of whether this is going to be successful is hash rate, which you don't have that much control over, but energy costs and the price of crypto. So those who can get access to lower cost energy tend to win. And
Right.
if you make it on site and or figure out a way to do it from a renewable standpoint, that's where crypto mining really gets its bad blemishes, is the fact that it's just hurting the environment. So have you guys gotten involved with that aspect of the crypto space?
So we're not yet involved with crypto in that way. We've studied the space quite a bit, and you're absolutely right. A few years ago, it was more a capital cost around the hardware and the software programming and to maximize hash rate. And now that those costs have come down, really the critical factor in profitability, relative profitability among crypto miners is going to be the cost of energy. At the same time, they've gotten a lot of pushback because they consume a lot of energy, and there are questions about the social benefit of using all of that energy, and staying out of that debate. The energy issue has been central to a lot of the success in crypto, because there have been utilities that have curtailed energy to crypto mining when they've got other needs within the system. So we've talked to a number of folks who are utilizing or have plans to utilize some sort of waste energy or waste fuel to power crypto. There's a lot of examples of that out there. We're actively looking at those. It's a little bit different from what we typically do, because our focus really is on technologies, renewable energy technologies that are proven, well established, so that we know what the output is going to be. We can reliably measure that output, and we can also reliably measure the costs associated with operating and maintaining those assets. And then from the revenue side, we typically look for longer term agreements, so that the revenue has greater level of predictability, which typically you don't get in that crypto type of offtake, because the profitability is going to depend on what the value of the whatever tokens it is that they are mining. Having said that, there are a lot of opportunities. There's a lot of creative folks, and there's a lot of money to be made in that type of business, and so we're going to see more and more of those types of opportunities, coming out where they're using some alternative energy source, either completely renewable or partially renewable, to reduce their operating costs and increase profitability.
Yeah, I've seen on the crypto side, as you mentioned, I've seen people use off-grid energy, where instead of just flaring the natural gas that's coming out of oil wells, they were trying to tap into that and use energy, reduce the cost considerably, as opposed to just wasting and flaring the gas. But that kind of brings me up to a question. So how do you decide where you guys are gonna go? Does Windmill Capital have a mandate on particular companies that you want to invest in, or what's your criteria on where you're going with your next dollar and your next kind of project to make a big impact on the globe?
So we look for a few things, like any hard asset owner, we're looking at particular markets and geographies. We have a global mandate, but typically our investments focus in North America, the Caribbean, the UK, the EU, and certain other markets. But that's generally where we get the most stability. And again, we're investing around that stability. We're not an opportunity fund. We're not a venture fund. It's a hard asset, real asset fund, hard asset fund. So that's sort of the first point. The second point is something that we know is going to be sustainable. The assets that we're buying are 20, 30, 40, and in some case 50-year assets. So something that we know is going to perform reliably over that holding period, or over that life cycle, is sort of the next criteria. The next is the management team. I mean, we're working with developers. And typically those developers are, we contract to operate the assets once we own them. Some renewable energy technologies don't require a whole lot of operating expertise. Things like solar, where the O&M is relatively straightforward, is sort of one end of the scale. The other end of the scale would be some sort of a waste to fuel or waste to energy, where you actually have employees full-time on site. So the ability of that management team, the proven experience of that management team to knowledgeably develop and operate the assets is sort of the next. And then I would say the last and perhaps most important is scale. The one-off investments in renewable energy could have value, but we find real value creation in scale. So the ability to, as I mentioned, schools, owning on-site energy production in schools has some value, with a handful of assets, but there's real value in ownership of 100 assets or 200 assets. And so the ability of our operating partners to scale, to manage their growth, is an very important consideration for us. We think that there's not only is the scale drive impact, which is important, but we think that there's also opportunity for step change in value from aggregating portfolios of assets at scale.
Yeah, you would have to have scale to have an impact, right? I mean, it's kind of
there's no question. There's no question. And we around that, we also say that when we look at the landscape of renewable energy technologies, that innovation is nothing without scale, right? If you can't deploy your innovation at scale, the value of that innovation is far less. So we have to be able to deploy at scale. And by the way, I mean, we're not making this up, right? A lot of the things that I'm saying are the same things that we're hearing out of the Department of Energy and other folks in this space, right? I mean, we just happen to agree that that's the right way to operate.
Sure. So you mentioned something to me that didn't really click with me before. You said you're a hard asset fund. So then immediately in my head, as an asset allocator, started spinning in risk management. Right now we're in an inflationary environment. I think it's going to be relatively persistent, but let's just say Powell gets his handle on it and we do bring inflation down to some extent. Or the opposite could be true. We could return back to the 70s and 80s. We've seen a lot of global stimulus, and it may be more persistent than we think. When I think of hard asset funds, that I think of something that has a inflation hedge, if you will. Can you talk to me about the correlation between like where your fund would be, the profitability of your strategies versus an inflationary environment?
Yeah, so typically even though we have the assets that we own have long-term agreements for the sale of power, there is some sort of growth in that contract. Either part of the contract resets to market levels, or for prices of electricity, or there are fixed annual steps in the price. We see we typically look for growing income streams, growing revenue streams, so that we can, to the extent that we have increases in our operating costs, we're able to offset that in order to continue to provide a high level of distributable cash flow. But I agree that the hard assets certainly have that inflation protection embedded in their value. The assets become more expensive to build, more expensive to replace, which means that the existing inventory of assets should also appreciate in value in a like kind. We do think that there is an inflation protection that's built in, again, both on the asset side, capital side, and on the income side, cash flow side.
So thank you for that. In looking at your website, something struck me, and I always get the question about ESG investing, and I know you said they're not the same, but from a public standpoint, that's what we're looking at. You said this was much more private. You had a phrase in there that was beyond profits, and we touched on this a little bit, but can you tell me a little bit more about your investment thesis for renewable energy and the profitability within that space? Because at the end of the day, when people are putting money at something, ultimately they want to see the return. So they want there to be some sort of viable, not just an altruistic donation to, make you get so much resistance. Right. Public schools are helpful, but every time there's a vote to raise the taxes, they vote it down, right? So it's got to be a profitable venture for people. So tell me a little bit more about how that works for you guys.
Yeah, you make a great point. It's important to distinguish, impact investing from donations, right? This is not philanthropy. There at the end there has to be a viable and reliable economic benefit to the investments. And I think one of the things that's made impact investing more popular, in addition to the social elements, are that there are fewer and fewer trade-offs between the social impact, the impact benefit, and the economic return. It used to be that you would expect from an impact investment there to be a lower economic return in exchange for the impact that's being delivered, and that is increasingly not the case, that you have to make these trade-offs, and particularly in renewable energy, the trade-offs, I don't think there's a trade-off at all. I think that we are able to generate market level risk-adjusted returns from our investments while delivering substantial environmental and social impact. And the things that are driving that, I mean, it happens to be the end of February, and we've had a significant weather system move through really the entire state of California. I'm in Northern California. The power at my home has been out for the last 48 hours. Okay. And